So while everyone's focused on what's going on right now with our short-term chart, right? The fact that Bitcoin is falling down to 21.5 and we've kind of been starting to find a little bit of support and people are wondering, you know, can we recover this? Are we going to continue down? There is something really big that's happened that everybody has failed to pay attention to. And to be honest, this is not something that most people will even want to talk about, but well, that's why you're here, isn't it? That's you know the deal. You're gonna get these harsh realities whether you like them or not, and this is something that's definitely quite concerning. I want to show you something that Bitcoin has produced quite consistently when it's set major market tops, and how that's kind of resulted in some price action for Bitcoin. So take a look at this, guys. I want to show you the double top that we set right here. Not quite a double top, but more or less at the same place. Also the double top that we set right here. A little bit hard to see on the weekly. We're going to zoom in a little bit further. You know, Bitcoin has formed a lot of double tops like this. Look, another example right here. And when we form these double tops, you can kind of see where this is going. They actually become quite serious problems for Bitcoin. And what's interesting is if we take a look at the last two times that we formed these double tops, we saw kind of similar price drops, right? I mean, from the high over here down to this low, we saw a 71% drop. From this high over here down to this low, we saw a 77% drop, or, you know, if we measure it from this high, which is a little bit lower, about 75, but kind of roughly on par. And I think that that's interesting because what we're doing right now is potentially confirming a new double top. And what's important about these double tops is that they're spaced out, right? If you take a look at the time between this top and this top, we had 210 days. If you take a look at the time between this top and this top, we had 175 days, right? We're looking at broadly similar, very long time frames, okay? On this occasion here, we saw a 525-day gap. On this occasion here, it was much shorter. We saw roughly a 100-day gap. This is important because if we, for example, set a double top that looked something a little bit like this, I wouldn't be as worried as if it happens on a larger time frame. And the reason for that is if it happens on a shorter time frame, you can very easily say that this is just kind of, well, yeah, short-term price action that, you know, maybe we drop down, whatever, trade in sideways circles, but then we can kind of come back up. But the problem is if we do this on a larger time frame, because if we're doing this on a larger time frame, that's then actually showing us that we could be in a situation where this is something a little bit more serious. And that, I think, is definitely something that warrants some attention. I'm going to continue to discuss with you how likely I think this kind of thing is and where I think Bitcoin could be in the short term as well throughout this video. But the first thing that I want to talk about before I kind of continue here is that this is only something to put on your radar. I don't necessarily think that this is going to happen, and the harsh truth of this is that you're not going to know until Bitcoin falls significantly lower, because at the moment, this could very well be a more healthy correction down to healthy support levels before we continue to trade up. And that is what I think we're in, most likely. You know, there's a few different camps here. There's, you know, the one camp saying we're just going to kind of completely drop down. There's another one saying we're going to maybe find some support on the way up, on the way down, but then eventually set new lows. And then there's the other camp that kind of says, you know, we might just be in a pullback before we continue up. And that's the side that I'm on in this market, right? I actually think that we're in the side of this market where we're looking at more of a recovery, but that doesn't mean I'm just going to ignore the facts, right? And the facts are that these kind of patterns are not good for Bitcoin. You know, take a look at this right here. You can see it a little bit more clearly on this chart right here with this double top. So we have a very clear formation here. Actually, you know, you could draw it slightly differently with this low, you know, with this drop, and we're looking at a 73% drop. And what's interesting about this is it potentially gives us a target of $6,500 if we kind of form a move that's somewhat on par with these two drops. And that, I think, is where this starts to get really, really saucy. Because here's the deal, guys, is that we already know this. If we do end up seeing a substantial drop, I mean, all it takes is losing this low. And guess what's happened, right? Is we've been within a bear market. We've had our first significant rally, right? We haven't actually formed a significant rally. The closest we got to it was over here, in my opinion, but this wasn't actually that big. Let's actually measure this from low to high. It was 47%, to be fair. That was quite a bit, not actually much less than what we had recently. You know, but we have seen, you know, a much faster rally now than what we saw previously, right? Take a look at this. It's a little bit slower, much faster on this occasion. And it's also the first, you know, kind of, if you're going to count this as a rally, this is the first rally we've had in a long time. I mean, you know, we didn't really have any kind of bullish play for, damn, like nearly a year. like 9-10 months here, guys. Very, very long period of time to not really get any play in these markets. And I think that's an important thing as well to take note of, because if we do then end up sweeping our low, which is down here in, the 15K range, this could definitely drop like a stone. That's what happens, right, when we sweep our lows. It's actually a very typical bit of price action for Bitcoin, where we set a support level, and then the next time we fall down to it, if we collapse below it, we're looking at really big drops. So again, we've set a support level. The next time we drop below it, we'd potentially be looking at a really big drop, just like what I outlined right there. And so it's quite conceivable that Bitcoin can actually get down to some pretty nasty price levels, to be honest, guys. I think it definitely makes sense that if we do lose this low, we could be sliding much lower. We know where the support is, right? We've got a little bit of support up here at 14K. We've got a really nice area of support between 11 and 12. But as far as the really strong areas on the chart go, like the strongest areas on the chart go, for me, it's going to be this sideways range that Bitcoin kind of traded in a little bit back in 2018, where we found a very important reversal back in 2019, stepping into 2020 as well. I think that this is going to be probably the most significant support area for Bitcoin, and it does line up with that 6.5K target as well. I fully do not think that this is going to happen, but I also didn't think that we were going to go below $20,000. And my job, again, as a trader, is to look at the facts and not let my own biases cloud my judgment. So while I don't think this is going to happen, we do need to keep in mind, as it was once famously said, the markets can stay irrational for much longer than you can stay solvent. So let's carry this forward here. If we take a look at what we are seeing right now on this chart, we have nice support in this range, right? I mean, as a trader, this is a really nice situation to be in. You guys know, if you're inside of 𝗬𝗢𝗡's VIP, which you can join by following these steps on screen right here, that I've actually been in a short trade on Bitcoin. I'm currently in, I think, more than a 30% profit, which is really nice considering that this isn't actually that big of a drop so far. So I'm really beating out the market by a very big margin right now, and that is because we did see this break of market structure potentially indicating to me that we could be dropping down, but we are now within this Fibonacci support area, and that's where things start to get a little bit interesting again. You see, falling down to levels like this give us beautiful trading opportunities. Our 382 retracements, our Ichimoku clouds with horizontal support, whatever. I mean, there's a lot that we can play with here, and these ultimately just give us really nice opportunities to trade in these markets. And guys, I want to highlight to you that Bybit is still running that 30K reward offer for you with the link in the description down below, where when you sign up to Bybit, you can get up to $30,000, a little bit more than 30 actually. It's like $30,030 if that extra $30 matters, which you can get for free, which you can trade with, right? You don't have to pay anything for that. You just sign up to Bybit, make your deposit, and start trading, and Bybit will give you a bonus depending on how much you're actually trading with, how much you deposited onto the platform, and that is a bonus that you can trade with. Like, you literally get that as demo money, and you can take advantage of the markets with it as well. It's a huge offer. There's a lot going on Bybit, a lot of ways for you to make money basically without doing anything, and that is very cool. So definitely check it out if you're interested in taking advantage of what's going on here, because these are huge offers and they are running for a limited time, right? To get up to 30K and basically demo money is ridiculous, because again, you can withdraw the gains that you make with those rewards, right? Whatever you make with it is yours to withdraw, and if you don't make any money with it, if you actually lose money, well, it doesn't matter, because again, it's like demo money. So essentially, see it this way, it's like I'm giving you a bunch of money and I'm saying, if you make money with it, keep it, but if you don't, it's my loss. And that's what Bybit is doing, which is absolutely amazing. I mean, to have that opportunity in these markets is ridiculous. But like I said, Fibonacci retracements here looking very interesting, because there's definitely some zones that might make sense for Bitcoin to be able to find a little bit of support in. When we're looking at price levels like this, we've got the $19,000 area right here that I've been outlining quite a bit, also kind of lining up with some of our important fib levels like the 618 retracement down here. And I've actually covered this with you quite a bit in my recent videos. Those of you who are subscribed are going to know all about that, where if we take a look at this on the daily time frame, I've had this box drawn now for a very long time, showing you guys that this price range between 18.5 and 19.6 is going to be a very important one for me. And again, we do have some nice fib kind of interactions around this level as well, right? right? So take a look at that. So I don't want to talk about this too much because I have spoken about it quite a bit, but I do think that if we fail this support area, which in my opinion is a very good support area for Bitcoin, if we do fail it, we are going to have to come down to at least this one over here. This is also a mirror, right? 382 level is a mirror of 618. You know, so they mean the same thing, and I can actually just show you that, by the way, by drawing the Fibonacci the other way around, and you see that the Fibonacci's are in pretty much the same place. So they are mirrors of each other. You know, you can draw it like this, or you can draw it the other way. It doesn't actually make a difference. But these are definitely important price levels, important bounce zones for Bitcoin. I'm not sure if we are going to get a bounce from Bitcoin over here. You know, if we look at things like the Fear and Greed Index, I actually like the fact that it's kind of reset a little bit. We're now no longer in greedy territory like we were last week, but we're still right in the middle in neutral territory. I think this could definitely drop down by a fair bit more, so I don't think we're low enough yet. But it's a good start, right? I don't like seeing the Fear and Greed Index too high when I want to see that the market is rallying up, because if the Fear and Greed Index is showing a very high rating of, you know, a lot of optimism and, you know, greed in the market, well, you know, I mean, usually, you know, that's going to reflect what the masses are thinking. That's going to reflect the majority, the 90% of people in these markets, and obviously they are usually incorrect. So that's not, you know, something that I'd want to be on the same side of. But I am liking that it's starting to drop. I think that it could definitely drop further, and I think it would be too convenient if we just kind of came down to a support level like this and then continued higher. Now, it's true that when we were trending up, we had a relentless uptrend. I mean, the uptrend just didn't fucking stop. So it makes sense if we have shallow pullbacks, because this is showing us a lot of strength. Perhaps we have some strength even in our pullbacks. That would definitely make sense. And I think that there's good reason to believe that this might actually be the bottom as well, at least for now. If we take a look at this chart right here where I throw on the RSI, you can really start to see, guys, that we've got, you know, now we're approaching, you know, I mean, we're in neutral RSI territory, whereas previously we were heavily overbought. That's on the daily time frame. But if we zoom in even further to the 4-hour time frame, we're, you know, we're fairly steeply oversold, or at least we were, you know, a day or two ago. We're still in oversold territory now, potentially indicating that just relative to the price action we've had recently, we have now potentially sold off a little bit too much, just for now. Right, only relative to what we've done previously. It doesn't mean we need to recover back up, but it could be an indication that, you know, maybe we've seen a good amount of selling pressure so far. And again, if there's any place where this dump stops, to me it would make sense if it's over here or over here, right? So these are the two bounce ranges that I was expecting. They're the two price ranges that I told you about anyway when I was making videos before this crash even happened. It's not really a crash, but before this drop even happened, I was warning you guys that a drop like this would make sense. And so, you know, that kind of thing definitely does make sense. The other thing that I want to highlight before we zoom back out and talk about that 6.5K price target and so on is what's happened with our key support indicators. Now, we have got the 4-hour Ichimoku cloud here that I warned you guys would, you know, potentially fail for Bitcoin. Now, that has ended up failing, and I covered this with you recently, but the addition to that is it has now also turned into resistance. And this gets a little bit worse on the 1-hour time frame, because what we had right here, guys, was a situation where our 1-hour Ichimoku cloud, you know, when we started to fall down, has begun to act as resistance, and I think that could turn into a problem for Bitcoin. We've already found resistance in this cloud now since we started to trend lower from this high up here, but we now have this resistance again, and it starts at about 21.9 up to about 22.4. This is definitely a price area that I think could cause some problems for Bitcoin if we rally up into it, because I think that now that we are potentially in a little bit of an uptrend, I'm sorry, a little bit of a downtrend again, there could just be a little bit of fear where every time the price ticks up a little bit too high, in this case it was obviously up here, you know, traders start feeling like, you know what, we made some money. You know, this is kind of the psychology I'm trying to outline to you, is that, like, people are going to be thinking, okay, we made some money kind of buying up here, maybe this is the end of the uptrend, right? So if you bought on this breakout, you might start to think that if we rally up to here, this is a good enough exit, right? Because you've traded this whole move. Yes, you didn't get above the move. You didn't capture anything that happened up here, but it's very normal to make, you know, 10 steps forward and then, you know, 3 steps back. And that's where you close and that's where you take your money. It's actually really healthy, right? I mean, the only problem with it is loss aversion, because psychologically you might be a little bit upset by it. But I think that is how a lot of traders could be thinking. And that is kind of what drives some of that selling pressure as well. Because if we're not seeing the buyers step in at price ranges like this as well, that's where we could definitely start to run into some very real problems. Now, if we take a look at some of our other charts as well, right here with our long-term perspectives, and just kind of look at what these dumps look like in terms of percentage points, just to, again, you know, just kind of put us, give us some idea of what we could be looking at here. With our major market tops, we've seen 93% down way back in 2011, 2012. Then moving on to 2013-14, we saw an 85% drop. And then in 2017, when we set that top at 20K, we saw a 84% drop down to a low over here. So far, we are down by 77%, but with a price target like what I mentioned earlier in this video of $6,500, we would potentially be looking at a 91% correction. So is that too much? Probably, yeah. It's definitely a very big correction. It's unnecessarily big in my opinion, but is it impossible? No, I wouldn't say so. We saw 93% before, we saw 85% twice. Is it completely off the charts in terms of what's possible to say that we could get a 91% drop? I don't think so. I don't think that there's one magic price level either. Whether it's 6.5K or 8 or 9, you can fucking throw darts with your eyes closed and it would be just as accurate. Because bottom line, the market is going to be driven by so much fear that if we do fall down to those levels, I think it's going to be driven by so much fear that, we could collapse below important price levels really quickly. We could wick down to ridiculously low levels like $3,000 and then come right back up. We could wick below 3K. Anything is possible. Not just now. It always has been that way. We're talking about Bitcoin at the end of the day. It's one of the most volatile, dangerous, assets that you could possibly be in the world, in history even as well. And I think that definitely, it makes a compelling case that, anything's on the cards, and, if it sounds impossible, then maybe that's a reason that you should consider it a little bit more than you might already do, because at the moment we have only dropped by 77% and we are still in a bear market. I think a lot of people are forgetting that. If we look at the kind of price action that we've seen so far, we haven't actually seen a very real reversal yet. We had an amazing monthly candle right here. I absolutely love it. I think this is a great candle that Bitcoin has been able to produce right here on the monthly time frame. Let's take this chart right here. Great candle that Bitcoin has been able to produce on the monthly time frame. A huge bullish engulfing candle. It does still engulf the previous 4 months of trading, which is extremely bullish, right? And historically, this has meant a lot for Bitcoin in a very positive light. And I still think that that's what we're looking at. But again, this video is about just being open to those possibilities, because a lot of people won't. A lot of people can't. They just can't take these ideas. It upsets them. It tilts them, and if you're in that camp, well, you just shouldn't be a trader to begin with, but if you can kind of stomach these kind of ideas, just acknowledge these possibilities and fuck me, at least prepare for them. That's the important thing to do as a trader, right? You might not like it, but you have to be prepared just in case, because if you're not being very financially responsible. If you can do that, then yeah, you're putting yourself in a good position. Bottom line, guys, this is something that we've seen play out for Bitcoin before, and it's been very nasty. It has been very nasty. It's definitely not gone well. There have been occasions where, we might have formed a, kind of double top pattern, but it was only temporary, right? There's a lot of double tops you can point out. Take a look at this top right here and then this top right here. We did temporarily have a problem, but we didn't enter another 73% drop, right? On occasions like this, we set a high like here, and before we broke this level back in 2017, it probably might have looked like a double top. But again, it continued on up. So there's a lot of examples where this works out. But what's important is keeping in mind that we are still in a bear market, and we have now, for our second weekly candle, guys, we have now confirmed that this is a top, right? And it might be a local top, or it might be a trend top, right? It might be a top that only lasts for a short amount of time and then we break it. Or it might be a market-defining top. We don't really know that yet. We're only going to know if we break above it or if we drop down much lower. But this is definitely something to keep in your mind, as one of your considerations, because at a time like this, it feels really impossible, right? If you look at where Bitcoin was, previously, it was very hard to entertain the idea that, when Bitcoin is trading all high and mighty up at like $50,000-$60,000, it was very hard to consider that we could, at some point be down at $15,000 again. And that's exactly why it would have been most rewarding to entertain those ideas up here, as opposed to entertaining those ideas down here, because you would have sold with much more profit up here than you would up here. Most people down at these price levels are actually in a loss, and that's something to be keeping in mind as well, just so that we are staying very level-headed with these markets as we go on. Now, again, I want to remind you that we have a huge offer right now running with Bybit available to us. And what you can do is follow the link in the description down below to get up to $30,000 in trading bonuses. Again, this is absolutely huge, and this is the primary exchange that I've been using for years. I've been using these guys since before I even started to work with them, on YouTube, because I just love the platform. And with up to $30,000 in rewards, you are getting a huge head start in your trading, right? I mean, depending on what you deposit and trade with, you're getting free cash that you can trade with, and you can keep the money there. It's a huge opportunity. And even if you're already on another exchange, even if you're already on Bybit, it's worth having secondary accounts so you can spread your risk, right? If one account gets hacked, if one exchange has a problem, and so on and so forth, it pays to insulate yourself from these issues. And having access to Bybit with these offers is very damn impressive as well. Obviously, I want to highlight OKX as well, because they're also offering you guys 30K, but that is in mystery boxes, which means that it's actually a lot easier to get than Bybit's rewards, because Bybit's rewards, are based on if you actually meet the criteria. But with OKX, it's just down to luck if you get it or not. So definitely go ahead and check both of these out. These are two of the best exchanges in the space right now, for sure. And I mean, that's just a fact. That's not really me saying that because I am working with both of these guys. They are literally the two biggest players in the space, or one of, and certainly the most reliable. Neither of these guys have had any real attacks and so on in terms of hacks and all that stuff. So that obviously is very important. It's a top priority, actually, if you're looking for a place to keep your funds and so on. But there you go. I hope you have enjoyed this video. If you have, then go ahead and check out these steps on screen right now to get inside of 𝗙𝗡𝗡𝐻𝐻 VIP. Like I said, the trade that I'm in right now, which I'm in around more than a 30% profit in, was shared inside of VIP. I told them that I was making the trade. I told them why. I told them where my stop loss would be, where I'm taking profits and so on. And they are continuing to get real-time updates on how I am navigating this position. It is a huge deal to me. And if you want to get inside, then you can join by following this link in the description down below. And then when you're there, it will take you to this page where you can click on my name and send me a message. It's really simple. It's only 3 clicks. There's no sign up, no download required. And this puts you in a direct chat with me as well. So you can ask me anything you want. If I can't reply to you, one of my assistants will. I really hope you've enjoyed this one. You know what to do if you have. Hit up the likes, subscribe, tick the bell, and I'm out. Stumbled on my words there. I'll see you in the next one. Cheers.